What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 10th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to discuss. We'll not only be taking a look over cryptocurrency markets, where we're continuing to see altcoin dominance rise over the last few weeks, but outside of this, well, we'll be taking an updated look at the coronavirus, seeing how things are growing, or maybe things might be getting better as well. And outside of that, taking a look at the insider buying and selling in Wall Street stocks and seeing whether or not Wall Street on large is selling more than it's buying. So we've got a lot of things to discuss, but real quick before we dive into that, I just want to let you all know this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to interact with other traders and socialize, but they also recently launched their copy trader feature. So you can click on any of the major traders on the platform here, like myself. You can view their real-time stats, their current portfolios, and a chart of their past performance. And if you like what you see, you can copy alongside them real-time by clicking the blue copy trader button at the exact same price and exact same time. So if you guys are interested, check out the link down below in the description. All right, so let's go ahead and take a look across the board on the market here, guys. There are a few key players here that are entering into double-digit territory, both to the upside and on the downside here. But again, most of the market here in a relative no trend scenario, somewhere between 1 to 2% to the upside or downside. So no serious trend here over the last 24 hours. But we have definitely seen over the past few weeks a very clear trend across the board here on markets. And that is yet again a continued week to the downside for Bitcoin dominance. So as Bitcoin is smashed through 10,000, guys, and we're going to be talking about that in just a moment. We've had this breakthrough on 10,000, confidence roaring through on Bitcoin. We've also seen a consistent day-by-day trend through the weekdays and on the weekends, where we have seen Bitcoin dominance continuing to slowly decline, fractions of a percentage day by day. And it looks like we're very much on pace for our target range of around 60 here. And I think a lot of this is coming in on the plays that you guys know. It's coming in on a lot of the big plays like Ethereum and Litecoin. And it's also coming in on a lot of our small cap plays and mid cap plays that we've talked about. Like, for example, Chainlink, that's well over $1 billion now. It's pressing up towards $3.30. And outside of that as well, we've got a ton of other altcoins that are just generally as a market starting to tick upwards. Some of the ones that you guys have been waiting to see move up for a very long time. So it's really nice to see here. Again, there seems to be an overarching sense of confidence across the board. Now, if we take a look at Coinbase, we'll see here that we got above 10,000, but it seems here in the last couple of hours, we've had a dip down here. So we broke down past 10,000. We went up to a level around 10,200. Small pullback here, about $400, and now we're back to a general resistance range we were at for some time. I think the question here is whether or not we can make this a support. But again, in the sense of short-term levels, guys, as much as this has been a $400 decline, if you take a look at the weekly, our indicators are still signaling confidence. I apologize, the log chart's going to look kind of weird there if I don't have it set, or the chart would look weird if I didn't have it on log, because these lines are meant for this. So I want to go ahead and actually talk a little bit about this. I couldn't recall exactly over the last few days if we talked about this, but I've been looking at the chart more and more in the sense of the logarithmic basis, and I've come to the conclusion I think that the next point of resistance that we're really going to hit here before we get a serious kind of like miniature pullback here, similar to like the 30% pullbacks we get in the past, is going to be 12,000. I think that we're going to come up here, we're going to continue to coil in, and sometime here in mid-2020, we are really going to break out, start charging up towards 20,000, 20,000, the previous high of Bitcoin up here in the past. And I think it's going to be in a very short period of time where this really starts to move up after we coil in through here for another couple, few weeks here. Or actually, I really say it's a couple of months here, as we might be going all the way up to April, May, or June. So again, I'm keeping patient with the guys. I mean, this has been a great rally here. I think people have been reassured with the confidence and the price action that we've had since back here around the low $7,000 to upper $6,000 range. And what's nice is that even if you average in as far back here as July, right? Only, we had some positions actually that we averaged in down here. You're up in your money, right? If you bought anywhere in the low 1,000 or 9,000 range, 8,000 range, 7,000, 6,000, there's plenty of room of opportunity. And luckily, those positions are cash positive now. So that's why I always say, guys, when there's absolute fear in the streets, especially compared to history, as we had one of the longest, but also one of the harshest midway corrections before we actually broke back up to the previous highs of the last cycle, that's when you get eager. So, I mean, that's at least when I got eager. And so far, all my positions I averaged in, whether it be altcoins or Bitcoin, are up right now, right? So again, you guys can go look back. I was just actually watching a video just the other day for back here around 6,000 and stuff, and we were talking about just holding through those painful times. Well, I'm not again. I can't tell you guys what to do, but that's what I personally like to do. I like to hold through fear. I like to average in. I like to buy more positions. I like to buy blood on the streets. That's what any kind of successful investor does, right? So, anyways, I rambled on enough about that. We can take a look at some individual altcoins. For example, Kyber Network's been doing pretty good. Chainlink, I think probably Link is going to be the one we look at today. It's one of my bigger positions. So we can take a look here on Chainlink. Still on pace here, guys. Doing exactly what it needs to do. Had the big breakout the other day on Friday. And then now we're just basically holding up here with Bitcoin. It's a matter here again of continuing to set higher lows here. The more lows you set away, the further away they are from that line of support that's been holding it up for some time. So you can see on the logarithmic chart, it's more and more of a signal that this is going to break out sooner, right? And the reason I say that is because if you're starting to not come back and retrace this line here, it's showing that the buy side pressure is starting to press up. People are realizing the very clear technical formation here. We held at a very important level of resistance and made it support. We're continuing to set higher lows further away from the line that's already rising up at a pretty steady pace against Bitcoin, which is already doing really well. So this is the kind of price action we'll see. Again, I know a lot of people don't want to buy into something like this because they're like, oh, it looks expensive right now. But this is exactly what we saw in Ethereum in the last cycle. Ethereum was already one of the best performing currencies, and then it kept becoming one of the best performing currencies, right? At least for one of the large cap plays. So again, this is where you want to buy into strength in this case, guys. Right? I'm not telling you guys you buy Link, but I like these kind of charts personally. And this is why I've continued to hold my position, and it's been one of the best performing ones since I really started building back here in September, right? I'm up on my Bitcoin. I've doubled my Bitcoin comparative in a lot of my positions back here. So anyways, just again, a good example here of what kind of plays you should be looking for in the sense of price action. And then it's a mix of fundamentals as well, and considering as well, all the three different factors that we do as macro traders, right? We want to see good, consistent price action. We want to see the indicators flipping well on the longer term time frames. We got that. And then outside of that's the fundamental story. Those are the three kind of key elements in order to make a very solid trade. Now, I want to go ahead here and talk about a very interesting point that came out from Coinbase here. So Coinbase came out making the claim here. I guess the Coinbase team in general kind of made this claim where Bitcoin in the next 93 days, again, that's kind of the estimated date for the halving, could be a little earlier, could be a little bit later, is estimated to be similar to digital gold here. Now, this statement derives from the fact that obviously the halving event is coming soon. And the reason that they make this claim of Bitcoin being like digital gold is not only because of all of the great technological advancements that Bitcoin offers in the sense of ease of transfer, it's obviously digital in this case, and outside of that, being able to have a fixed supply, which is much better than just a limited supply like gold. The big element is that the stock to flow, as you've probably heard us talk about, which has to do with the certain amount of issuance of a given asset in a given period of time compared to its overall supply, right? So it's very a good way to put it actually is kind of like it's almost like an inflation rate in a sense. How much are we seeing more inflation or are we seeing a decreased inflation rate? And as you guys know at the halving event, we see that decrease. In fact, it's a half in the sense of the actual issuance on a day-to-day basis here, right? Or every 10 minutes, instead of issuing a certain amount of Bitcoin, we're now issuing half of that Bitcoin with the halving event coming into play. So it's a very important thing to look at the stock to flow model. And what's nice, and I think this is a fair point, we've brought it up here on the channel before, is that it's going to become very similar to the stock to flow ratio of gold. All right, gold is held roughly speaking around a 2% annual inflation rate, around 1 to 2%, pretty much on par with the reported inflation numbers of worldwide currencies, which is why sometimes gold can actually go on pretty severe corrections and take a while to come back, as we saw here over the last 8 years after having a gold bull market. So just wanted to go ahead and kind of stress this. I think it's a really, really good article if you guys want to read through it here. When we reduce down from the current rate we have down to 6.25 Bitcoin, this is going to change things a lot. It's going to bring us down to around an inflation rate of around 1.7%. I mean, this is big stuff, guys. This is going to not only set a supply shock in probably around the short term for the next couple of months, but it's going to set in stone the real argument here that Bitcoin is a it's programmatically set to be a store of value over time. And people are going to start to finally get that when they start to see the price going up exponentially. And again, most people don't care about it right now, guys. Again, I've said it in the past. I know I use the term like we are an anomaly, right? We are a small fraction of people who really do our own due diligence on this industry, care about this industry, own positions in this industry. Little to no one knows about any of this, right? And because of that, we could say that, oh, people are going to price it in. Only so much people can buy ahead of time in anticipation for the halving, right? If Warren Buffett appreciated this, and a group of multiple billionaires across the world appreciated this model, and they appreciated what Bitcoin is and what it's becoming, then yeah, there could be some front running, but that's not the case. Most people do not understand this because they either don't take the time to learn about it and they just like to buy when everyone else is buying Bitcoin, or they just simply have yet to realize the potential of Bitcoin. And that's probably the case for a lot of people. So anyways, really good article here. Now I want to go ahead, there's really not much developments in the sense of news for the crypto space. I want to go ahead and talk about some of the things going on in global markets. Coronavirus, sadly, continuing to grow up to 40,000 cases here so far in the month of February. That's not just for the month of February, so that's the total amount, but starting back here, late January, right? We're coming up on, about a week away from having a full month of the coronavirus really, spreading in this case. So at 40,000 cases, I have to say this is actually much more, smaller than I thought it would be. The reason we probably thought it would be a lot more is we were expecting, or not so much expecting, but we were looking out for potential of compounding. As back here, there were some days where the numbers doubled. So for example, we went from 916 to 2,000. So I was worried that if this was going to have a compounding effect, especially during Chinese New Year, then in this case, it was going to get really, really bad. But to be fair, guys, again, there's a lot of interesting things going on in China. To put it simple, there's a lot of weird video footage and stuff of that sort. I don't want to start conspiracies or anything like that, guys. I do love a good conspiracy. But at the end of the day, yes, there's probably some number suppression in China, no doubt about it. But the Chinese government has literally gone straight martial law. They've literally welded off doors to people's buildings. They're building in Shanghai, they're building a new hospital. It's crazy to see the amount of kind of precautions that China is taking. And it just recently was said that Z finally appeared publicly talking about it. The death toll officially in China hit 910. And again, that you see nations across the world taking pretty stringent measures for it. Now, let me go ahead and explain where I stand right now, guys. I have to be honest, I was very, very concerned about the coronavirus. The 3% death rate is, again, it's kind of estimated 2 to 3%. Either way, anywhere from 1 to 3% would be concerning. It's much higher than the common, seasonal flu. But along with that, as much as I'm concerned about the death and the kind of virality of it, there's actually a lot to not be fearful of. For example, I'm looking outside of China in this case, and I'm seeing, for example, in my home country, the United States, it's been at 12 cases for a very long time. And that goes with a lot of these countries as well. We're not seeing an expanded growth of the coronavirus really outside of China. It seems like airports, specifically flights coming in outbound from China, are taking really severe caution and making sure to not allow people to spread the coronavirus once they arrive back. So I think in this case, there's been a lot of really good measures. The numbers are not really growing much out. Now, again, there could be that there are some cases that haven't been reported, of course. But for a multi-day basis here, to not see exponential growth and to see that we're actually getting people reporting that they feel sick and being able to quarantine those few people, or just, I don't know, quarantine. You guys know sometimes they misuse improper words in this case. Basically take people aside and make sure that they're kept in a quarantine area and stuff until they actually get rid of the virus. But yeah, again, anyways, rambling on here. Another thing that's very positive is the total recovered compared to the total deaths. This makes me so much more happy, guys. I don't want a pandemic scenario. I don't think anyone wants that if they're really thinking logically about it. I think this is so awesome to see that we're getting close to nearly 4,000 recovered. If we continue to see this rate grow, we're nearing about 4,000, as we'll probably enter towards 1,000 deaths. And that again shows us a positive trend where this is becoming a smaller and smaller number. So I like seeing that. But yeah, again, I gotta say it's interesting to see how China's reacting to this. But global markets are not responding quite positive to it. Most Russian indices down around 1 to 1.5%. The small cap index for the US down nearly a percentage point. Dow Jones down 0.90%. We also have the Nasdaq and the S&P 500 down 0.54%, and global markets, generally speaking, down with a few exceptions down here. And actually, out of all places, China, which is, of course, as we know, blocked the ability for people to short sell stock in China, and also is, I think, not to mention as well, they've injected over, I think it was like 120, $140 billion of liquidity. Yeah. So, what are you going to bet against? Are you gonna go long the market that's literally injecting a ton of money into it and is restricting you from shorting it, or are you going to try to bet against that? It's like, well, of course, in the short term, you're not going to. It's just crazy. We're living in the twilight zone in many ways. Now, another thing that's important to take into mind as well: oil now nearing $50 as OPEC, yet again, continues to hesitate towards bringing any serious supply cuts, as the United States, as Russia, as a variety of regions across the world start to produce en masse again. We are yet again seeing a continued glutton supply here, and we're not seeing a growth in global demand. In fact, one thing that I actually want to take a look at real quick is the Baltic Dry Sea Index. So this is basically an index that showcases, I forgot to bring it up here again. So the Baltic Dry Index is a quote for the general kind of cost in relation to, thanks Bloomberg. Okay, we gotta wait here. Anyways, see, this is what I gotta deal with, guys. I'm trying to give Bloomberg some free exposure, and they're not taking it. Just kidding. Anyways, so let's go ahead and talk a little bit about the Baltic Dry Index. So this is a really good index here. It demonstrates the general it gives a good picture here of the demand for shipping goods and services across the world. When the Baltic Dry Index is high like this, back at where it was back in September of this year, in that case, that means that there's a lot of demand for goods. The economy is doing well. There's a lot of exports and a lot of global trade going on. But we've seen over the last few years, if we looked at a longer time frame here, that we're still nowhere near where we were back in 2008. This was where global shipping was beyond in demand and stuff. The world economy was at a rapid growth rate. Commodities were highly valued, and because of that, again, there was a lot of growth and development throughout China and a lot of regions that demanded imports and exports. But now we've reached a new low that we haven't seen on the index since back here in 2016. So this is very, very concerning here. After a really positive period back here in September, we've seen an absolute stunt in the growth. Not only, I think, probably just due to a decent pullback, but also with the developments of the coronavirus. A lot of trade is frozen right now. And I think this is going to continue to go down, probably down to a level we've seen back here in 2016, back around 300. And that is spelling really bad news for the global economy. Not to mention as well, there's an important thing to note in the sense of equity markets. We're seeing a continued sell side set of pressure when it comes to insider selling. They're rushing to sell their stocks right now. So if we take a look here, this is something that, again, I think a lot of people don't realize is actually public knowledge. Any major insiders in the company, what that means is someone who works at the company, someone who's on the board of the company, maybe a previous CEO of the company, someone who has direct relations to a publicly traded company, either buys or sells shares in their own company. In that case, they need to report it. All right, it's public knowledge in this case. It's a point of due diligence on the point of people in these companies to report this and to share it publicly, because it's just a general kind of concept. If I, for example, am investing in Amazon, I need to know if Jeff Bezos is, a net buyer of the stock or seller. Like if he's just selling it all and saying how great Amazon stock is, and then I figure out he has no stock, it's a little bit unfair, right? So that's the major thing to take into mind here, and that's exactly what we're going to be talking about. Jeff Bezos, over this month, and also back during the summer as well, right? We can see back here, back in August of 2019, has yet again got on another selling tirade of Amazon stock here, selling billions of dollars in the matter of a week. We can see here through this past week here, sold well over $2 billion of his own stock in Amazon. Now, this makes sense, guys. He has a net worth of like $140 billion last I checked, and that's even with having to give some to his wife after they had their official divorce. Like, yeah, you probably want to, diversify and exposure money somewhere else. But along with that as well, he puts a lot of it into Blue Origin as well, so could be that. But notice as well that as we're seeing buyers press Amazon stock even higher here, he's taking this opportunity to sell into the buy pressure. And this is exactly what we've seen here across the board of the market. There's been more and more sellers here on the inside side, the insider selling, than we are seeing on the buy side, right? They're not buying shares at these levels. They're en masse selling. And anytime there's an increase in insider buying here, we see it outpaced with much more of a sell side. So again, these massive spikes here and stuff, again, mostly due to Bezos in this past week. But again, if we take a look at the longer term trend here, we can see that en masse here over the last few years, insider selling has far outweighed any kind of insider buying. So very important to note here. So anyways, that's it for the video, guys. Hope you all enjoyed this video. If you liked it, drop a like. And if you have a comment on anything that we talked about, please feel free to leave it down below in the comment section below. But until the next video, everyone, I hope you all are doing well, and I'll see you all in the next one. Stay tuned.